want to see if one of the world's most successful investors, billionaire many times over, what he makes of it. Ken Fisher, Fisher Investments founder and chairman. Ken, always good to see you. You always hear this, railing about the debt. We got to do something about it, and it grows and grows and grows. What do you make of it? The markets don't seem to focus much on it. Why is that?
Thanks for having me on, Neil. First, it's a lot like with Adolf Hitler. Terrible guy, but it doesn't mean he didn't have good table manners, despite being a terrible guy. You know that I almost never agree with what the Fed does. Janet Yellen used to be head of the Fed. I almost never agree with Janet Yellen. I think she's terrible, kind of like a lot of other high IQ swamp critters. But that doesn't mean that she's wrong about everything she says. If you actually look at it and you think of it this way, it is reasonable if you think of it under what I call the 40-40 plan. The debt being reasonable, that's what she said. First, debt as a percent of GDP is actually 10% lower than it was 3 years ago. It's a point that people don't notice. But the way the debt's bigger, but the way people think is, debt's bad, more debt's worse, too much debt, you go to hell. Fact of the matter is, at some point, that's right. But it's really, as she said, the carrying cost of the debt, what the government has to pay as a percent of tax revenue, or what the government is having to pay relative to the size of the economy that determines affordability. That is now at the same level, that it was 40 years ago. It's a point that people don't get. And if we could do fine when it was rising 40 years ago, we can now. Do I like the level of debt? No. I wish it was lower. I wish we had less. I wish all kind of good things. But the fact is, it's reasonable. That's the first part of the 40-40 plan. It's where it was 40 years ago. The second part is, believe it or not, amazingly, it's where it was in 1940, just before we went into World War II, where we took on a lot more debt going into World War II, and that number went up because of World War II. And the fact of the matter is, we were okay then too. Do I like it? No. Do I wish it was lower? Yes. Is it reasonable by historical standards as a carrying cost of the debt, the government's ability to service the debt? It's running at about 12% of tax revenue. At that level, it is reasonable. I don't like it, but it's reasonable. Milton Friedman said when I was a kid in the 1950s, that if the government spends the money, we're going to pay for it one way or another. It's going to be taxes, it's going to be debt paid later, maybe it's going to be inflation. And of course, inflation makes the prior debt less valuable. And it's a factor that people don't ever factor into the affordability of the debt. But I don't like it, but it's reasonable. I'm not going to quibble with her on that point.
Okay. You did mention the Hitler thing, but the one thing that I would say is we ignored Hitler until it was too late. We're maybe ignoring this debt, to your point, because it is manageable now, so we put it off. But history does suggest the times we rarely did get serious about it. I think in the Clinton years, working with Newt Gingrich to sort of get welfare to work going and all this other stuff, and then we started changing deficits into surpluses. There was a boom in the markets. I don't know if it entirely owed to that. There were other factors, to put it mildly, internet boom and the rest. But do you think if both parties got serious about this, there could be rich rewards for everybody, including the markets?
The issue is not the debt. The issue is the stupid government spending. As Milton Friedman says, if they spend it, we're going to pay for it one way or another. Debt's just one way to pay, and then you pay it later. The fact is, capital markets, I'm an investor, capital markets think out about 3 to 30 months and not much further into the future. What we really need future Congresses to do and future presidents to do that they've not been good at is to stop spending so darn much money and shrink government spending as a percentage of GDP.
Well, good luck with that.
If they do that, the debt will take care of itself over time.
Yeah,
if they don't do that, it won't, and you will have that problem.
Stepping back and looking at the markets, we had a kind of volatile week here, but it continues to be good for technology. I think the NASDAQ was a record every day this past week. It's on fire. The market's doing quite well. To your point, you saw a lot of that coming, especially after an awful year. You saw the year that materialized. I am just wondering now what you see happening. You reminded me of the history on this, that this almost always happens during a presidential election year. I'm just not sure what happens after that. What do you think?
So I don't know what happens when we get to 2025 either yet. I tend to look out into the future about a year. Let me make the following point. In years where we've elected Republicans, the election years tended to be above average, which is consistent with maybe Trump winning this year. But in the inaugural year that follows, they tend to be below average for Republicans. And I've explained that reason on your shows before. People tend to think the Republicans are more business friendly, more anti-big government, more anti-regulation. They get excited about that in the election year. And then they find out in the inaugural year the president can't do as much as those people hoped for. The flip side works with the Democrats. The fear that the Democrat will be big government, big regulation, big this, big that is in the election year and brings returns down when the Democrat's going to win. But the inaugural year, they find out that the Democrat can't do as much either. Democrats' inaugural years tend to be pretty good. I'll assess 2025 later as we get closer, and I hope you have me back on the show as we get closer to that happening.
Finally, I just want to get your sense of investors and their mood. Obviously, they're feeling psyched and they feel a lot richer. They also feel, a lot more haughty about their investment prowess and spending money they don't have, or realizing or thinking that this goes on forever. How do you prepare them for that moment? There are bumps and there are corrections.
So first, bumps are normal. Markets are volatile. We've got a lot of volatility inside this bull market. That's normal. You're not going to find bull markets that aren't volatile because stocks are volatile. That's right. Part of the reason that they have above average long-term returns compared to other asset classes that are liquid. But the fact is, you can think about trying to sidestep a bear market. You can't think about trying to sidestep a correction. Corrections normally defined as drops of more than 10%, but less than 20%. Those come and go for any reason or no reason, kind of like somebody yelling fire in a crowded movie theater when there may not be a fire at all. They come and go real fast, freak people out, they're over. I always tell people just ignore that. Only look for signs of the big bear market. And there might be big bear market, but that's not now, that's ahead.
All right.
In the other part of what you said, however, overall, we have not been overly optimistic as a culture just recently because of all of the bad things that happened as COVID hit and on through the 2022 bear market and the Ukraine war and all those things that we know about. And we're slow to get back to extreme optimism. Consumers are not overly indebted. They're better shape than they used to be 5, 10, 15 years ago, and so are corporations. It's the government that keeps piling on the debt.
Got it. Ken, very good catching up with you. Good seeing you on a weekend at that. Ken Fisher, one of the greatest investors on this planet.
Hi, everyone. I'm Brian Kilmeade. I want you to do me a favor. I want you to click to subscribe to the Fox News YouTube page. This is the only way that I know for sure that you're not going to miss any great commentary, any great news bites, any great interviews coming your way on Fox. You can get it all here on YouTube. So subscribe right now.